Chair Yellen, I want to first thank you for your patience and your responsiveness, and I was tempted to ask one question, which was your definition of patience, but I won't do that today. Instead, I want to look to the future. I think Senator Warner really outlined one of the concerns that I have. We always seem to be fighting the last economic war in the United States Congress. You are a very astute and very respected student of the American economy. It's what you do every day. I'm going to give you a chance. You've heard a lot of opinions and received a lot of advice from this panel. I'm going to give you a chance to give us some advice. When you look at leading and lagging indicators, especially leading indicators, what troubles you and what keeps you awake at night about the American economy in the next 10 to 15 years? And what advice would you give to the United States Congress in addressing those concerns that you have looking right now at those indicators?
Well, I've said on a number of occasions that the rise we've seen in inequality in the United States is a great concern to me.
We discussed this the last time you were here, and you offered no solutions towards that problem, you might recall.
I think there are a variety of different things that the Congress could consider in policy measures that might be appropriate, but this really is a domain for Congress to consider. So that's one of the concerns that I have.
So no advice on the earned income tax credit or on tax rates?
I'm not going to weigh in on things that really are in your domain to evaluate. So I think that's important. And I would say something also in Congress's domain is longer run issues with the federal budget. I think Congress has made painful decisions that have now really stabilized, brought down the deficit very substantially, and stabilized for a number of years the debt to GDP ratio. But eventually, debt to GDP will begin to rise and deficits will increase again as the population ages and Medicare, Medicaid, and Social Security get to be a larger share of GDP under current programs. And there are a lot of ways in which these are problems we've known about for a long time. I also worry that if we were to again be hit by an adverse shock, that there's not much scope to use fiscal policy. It was used in the early years after the financial crisis. We ran large deficits, but in the course of doing that, debt to GDP ratio rose, and were another negative shock to come along, it's questionable how much scope we would now have to put in place, even on a temporary multi-year basis, expansionary fiscal policy. And I think it's important to deal with these issues for the Congress to do so.
But your concern about scope doesn't lead you to believe that interest rates should be adjusted at this point to give you the flexibility to use interest rates should we receive another shock?
Well, the Fed would, of course, use the tools that we have to try to achieve domestic ends. But I think having fiscal policy be available as a tool is important as well.
Yeah, if we look today at the American economy and some of the challenges, and you and I have spoken privately about this, of the millennials and saving patterns and consumptive patterns, the shared economy, what concerns you about the now 8 years of changed behavior and consumption? What concerns you about those issues, and do you see those changing long-term consumptive patterns that may present some interesting challenges for the American economy?
Well, I think we're just beginning to understand how the millennials are behaving. They're certainly waiting longer to buy houses, to get married. They have a lot of student debt. They seem, quite worried about housing as an investment. They've had a tough time in the job market, and, you know, exactly as the economy strengthens, I expect more of them to form households of their own and buy homes. But we've yet to really see how this is going to affect that generation.
Or they may have experienced a change in consumptive patterns that will present some unique challenges, whether it's sharing automobiles, whether it is in fact not buying homes, doing the things that they've now done to accommodate their economic challenges in the long term. And I think that one of the things that we need to do much more carefully here in the United States Congress is begin to look at not just having a discussion with you about monetary policy, but looking at fiscal policy, whether it's tax reform or whether it is in fact taking a look at what we're doing with the mortgage market to begin to develop an economy that the millennials will fully participate in. And I hope you continue to think and provide us the advice that is extraordinarily valuable. Thank you.
Thank you.